Guys, are you looking for a quick snapshot of what's going on in the GTA real estate market? Well, this is the video for you. If you're a buyer or seller in this marketplace and need some clarity of what's going on in the marketplace in order to make the most important decision that you might be making this year, then you better be watching this video. Hey guys, this is Danilo from the King Realty Group. We've helped hundreds of people buy and sell homes here in Toronto in the GTA marketplace. We have lots of videos in the past talking and breaking down the market stats and giving you insights here as what are your resources to gain insight of what's going on in the marketplace. Today's no different. We're actually going to review market stats of January 2023, how they compared to last month and also how they compared to last year. And we're going to give you towards the end of the video some secret tips that's going to be helpful for you as a buyer, for you as a seller, and for you as an investor. If you did not know, we do specialize in first-time home buyers, first-time investors, and sellers. So if you haven't been in those shoes before, then this is the best channel for you, because we're going to give you a lot of details and a lot of insights that you may not get elsewhere. Okay. Of course, if you have any questions at all throughout this video, make sure you drop in a comment below. You're getting in touch with us, some of the buttons below as well, so that we can give you a breakdown in person or over the phone, one-on-one. Everybody's situation is a bit different, but I'm hoping this video is going to clarify things that might be happening in general here in the GTA marketplace. If you want to know what's going on in your micro market, whether you be living in Durham region or in the Toronto region, maybe in Mississauga, Brampton, Richmond Hill, etc. There's different things going on in your marketplace. So get in touch and we'll give you those specific details. Below, we actually do have a sign up as well for our monthly stats newsletter. It's going to give you insights for your micro market as well. So let's get going on this video, guys. First and foremost, let's take a look at our dot graph, which gives us a macro view and a in general view of what's going on in the GTA marketplace. Here we go. Okay, so here we have our dot graph, guys. We're going to focus in towards the end of this chart, reminding ourselves what happened last year. And if we're comparing to last year, why we have such a difference in year-over-year rates, which we're going to see in a bit in this video. But here we see that February of last year, we've had several months of declining price points. Then we have a period of about flat, no growth and no decline. And then as the last few months, we had a bit of a decline going into the winter months and the holiday season. So this little dip down is a bit normal. Typically in the month of December and January, we don't have as much activity as we normally would. So this is actually not so surprising. However, it is going to be very interesting to see how the market reacts beyond the month of January. And this is what's going on so far. So let's take a look at some other insights here. So we're going to switch over to is our month-to-month changes. This is going to give us an idea on a smaller scale what's been going on compared to the previous month. This gives us some details before we turn our page over to year-over-year stats. So let's have a look. All right, guys, so these are month-over-month stats. Let's first off focus here in on the different sales and average price totals that we have for detached homes. So 1,384 sales. We have average price of 1,341,848. For semis, we've had 240 sales last month, and the average price is 1,019,668. Townhouses, we had 499 sales, and our average price is at 887,610. For condos, we've had 950 sales, and our average price is at 687,968. How did we compare to last month though? So on this right hand side, we're going to see our monthly comparisons. Actually, our sales did increase a bit in the month of January, specifically for detached and semi-detached homes. We see here that townhouses and condos declined slightly, but anecdotally, I mean, I had buyers and sellers in the marketplace in the month of January, and we actually had an uptick in activity on the selling side. We saw a lot more buyers, showing properties, and there was a lot of cases of multiple offers, believe it or not. When it comes to price point, maybe we see a reflection of that. Detached prices came down a bit. Semis and townhomes were positive, and condo prices came down as well. On average, we're about 1% less than December price, which again, like I said, the month of December and January, typically we do experience declines. I don't know if this is saying too much here. However, over the last maybe 3 months, we did have a decline in price, and we're going to have to see if this continues into February. So the main point to remember here regarding the monthly price change is that there was not much of a change. We only dropped about 1% on average from December. And yeah, we had a bit of an uptick, I guess you could say, in sales. However, still we're well below our average amount of sales in the month of January. We had about 3,000, where, you know, typically we have about 7,000 sales in that month. So that was actually very similar to December as well, almost at 50% of our sales activity within a month. But like I said, I mean, we did actually experience multiple offers from the buyer side. We saw a lot of activity on the buyer side, a lot of showings. And yeah, I mean, that's very interesting to know. We had kind of a pop at the beginning of this year. We might still actually be seeing that here in the month of February as well. So it's going to be interesting to see what those numbers look like next month. Let's take a look at our year-over-year numbers. All right, so let's take a look at our sales here. So I mentioned we're almost at 50%. We had 3,100 sales in 2023. Last year, we actually had 5,594. So we're almost at 50% there. We'll give you the exact number in a sec. Here's our average price. We're actually down from 1.2 million last year, and we're at 1,038,668 January 2023. So here, let's take a look at our percentages to give you our percentage difference. So as you can see, our sales were down just under 50% at 44% decline. We have our new listings here also similar, and our active listings, we have quite a bit more listings on the marketplace. Still though, the interesting thing is that there is not a lot of new inventory coming into the marketplace. This is actually causing our marketplace to be kind of a bit tight. I would say like nicer homes on the market are typically still selling in multiple offer scenarios in the month of January. And there are some micro markets, some pockets, which there is not much inventory. So you might be the only house on the block compared to maybe a couple others. And if you look a little bit nicer than those, then as a seller, you might actually be experiencing some success here on the sale side. Days on the market, as you can see, have actually increased quite a bit. More than doubled here compared to last year. Obviously last year in the month of January, December, it was a really hot market. Things were selling really quickly. So I'm not surprised that this number is really high. And the big story here is the average price point. We're actually down 16.4% from January of last year. Next month, I'm going to predict that this number is actually going to be larger. It should be. Because that was our peak price. I'm going to show you, I'm going to go back one more slide here just to kind of give you another perspective. Yeah, I'm just heading back to this slide here just to kind of give you a difference. Here is January 2022 and here is January 2023. So this is that 16.4% drop. And I'm going to predict that because February was such an increase, right? And this was our peak number, we're going to have a decline that's a lot larger than 16% most likely. So yeah, just heading back here, I wanted to give you that comparison. So likely this is going to grow, and this is what the media or the news headlines might report more on, the fact that we have such a huge price drop. But I'm letting you know it is because we're comparing to last year. Okay. Perfect. So guys, that is the info that I can share with you regarding January 2023. So we took a look at our month over month numbers. They gave us a bit of info. Year over year as well, we're seeing some data. And I want to remind you that that year over year average price change is going to be significantly low, right? I mean, that decline is going to look like such a big number. We already know if you've been following these videos, you know that since last year, we've dropped about 25 to 35% depending on the market that you're in. So this is a reflection of that on a year over year basis. Next month in February, we're going to likely have a bigger decline. If you want more details on this, by the way, obviously make sure to be messaging us or scheduling a meeting with us to talk, even a 15-minute conversation. Definitely guide you and give you a lot more clarity. But we're going to move away from the numbers and we're going to talk about some tips that might be helpful for you as a buyer. So in this marketplace, we are experiencing multiple offers in certain pockets. If you're in an entry-level property, townhouses, sometimes some condos, we are seeing multiple offers. If you're in a hot neighborhood where there is not much inventory, historically not much inventory, and continues to be the case today, could be that you're experiencing multiple offers on the buyer side. So be aware of that. Having said that, there are some pockets, depending on what you're open to buying, where that may not be happening, and we're still negotiating price points, still getting offers accepted with conditions, and we're paying a lot less than we were last year. Actually, the biggest thing for buyers that you should remember is because interest rates have gone up, but our price point has gone down so much. What we're seeing now, and let me know if you need some help with a comparison on this, we're seeing is that last year, even though you paid such a higher price, you had a much lower interest rate, like in the 2% range. The actual monthly payment that you had to pay last year actually is very similar to the monthly payment that you're paying today, with a 25% drop in price and a higher interest rate. That's very interesting to me because the payment is very similar. The difference though is, I think, a lot more beneficial to today's buyer because you're buying at a 25 or 35% discount, somewhere in that range. That means you're getting it at a much lower price. We know that the market has a lot higher ceiling. We can reach higher prices over time, and likely we will because of regular supply demand. It just might take a little bit of time, but getting it at a much lower price, and that's a lot better, you know. And we know that interest rates likely are high on a temporary basis, and we're likely going to see lower rates in the future. When is debatable, but that is more than likely the case. Okay, and I can see that already because even the fixed rates are actually lower than they were even a couple months ago. They're trending lower. I know it is connected to the bond markets, but it's something that we're experiencing right now. You might actually luck out on a fixed rate versus going into a variable at the moment. So keep that in mind, guys. You're buying at a much lower price point, which means that your down payment funds are going to be much lower. And actually, your monthly payment is not going to be too different than what somebody has experienced from the same time last year. So that's actually an interesting point to remember. On the selling side, guys, we did have a pop this month, okay? The month of January, we did have a pop. I can tell you for sure that we had more buying activity, showing activity than we did in months past. And we're experiencing multiple offers for properties that are putting the correct effort. Our listings are always looking, you know, we're always going above and beyond and looking a lot better than our competition likely. My goal is always to look better than whatever other properties are in the market. And what does that do? That gives us a quicker offer and time on the market, gives us better offers and a higher price point, and it just differentiates us compared to the competition. And if there's buyers in the marketplace right now and they're looking at like a number of homes in the same area, they're gonna likely go for the property that they see themselves in, and it could be the one that's staged and it has, you know, all the bells and whistles. Okay, I think that that's very important in this marketplace. And the good news is that if you're looking to sell, likely this is a good time to do it at the beginning of this year, because we do have this pop. And I don't know if that's going to remain, right, because it could fizzle out. It is possible that we may have more inventory of home sellers coming into the next few months because of how good it's been, you know, over the last, let's say 6 weeks. So that could increase their competition. That could give buyers more option, and it could, you know, dampen or worsen your chances as a seller to get a really great price. Interest rates are going to remain high for the remainder of the year, so that could continue to grind down the price on average from the beginning of this year to the end of this year and maybe on into 2024. So if you're looking at it from that perspective, sooner is probably better than later when it comes to selling your home. Okay. As an investor, what opportunities are out there? Well, I mean, I can still see cash flow positive properties in cities just outside the GTA. You can still get bungalows, semi-detaches in that 500 range to maybe 600 range. Depending on the city, you might still be in the high 600s. But when you do the math and you're, you know, still achieving over $4,000 a month in gross rent from 2 units, I'm still seeing positive cash flow. It could be under $500, but I know when interest rates do drop in the future, and the fact that I'm getting it at a much better price point, so similar to the buyer story here, I might be cash flowing $1,000 or more later when I get a 4% interest rate. So hey, you're always buying on a long term when it comes to an investor, and I would suggest the same for a buyer as well. Make sure you're buying for 3 years plus, and this could be a really good market to get in. Okay. So guys, this is the info that I can share with you today. Again, if you want some details about specific marketplaces, if you want information on our neighborhood guides, if you want to sign up for our newsletter, which gives you information about micro markets and the price point changes in like Peel region, Durham region, Toronto, York region, etc., make sure you're using our buttons below in order to get in touch with us. Great chatting with you guys. Again, here to provide information and value. So if you want more from us, definitely let us know. We're here to over deliver. Okay, Daniel here from King Realty. Have a great day. We'll talk soon. Take care.